that positivity we're seeing in confidence around the world, particularly around businesses. Consumers are taking a little bit longer to see an improvement in confidence because consumers have really been hit by those high inflation levels we saw in 2021 and 2022. It takes a while to recover from that. But low unemployment, falling inflation, and rate cuts means that the outlook for markets and for the economy should be pretty positive going into 2025.
This is Converge, a podcast from Convera. Come with us as we shape the future of finance.
Hello and welcome to a Converge Market Update. It is December 17th. We are nearing the end of the year, 2024. It was a big year, so we have the opportunity today to recap some of it and look forward with our very own Stephen Dooley. He's the head of market insights at Convera. Steve, thanks for joining. Let's start with the biggest story, even though it occurred near the end of the year. All the worries about that contested election overpowered by 10 p.m. on election night. What's been the reaction to this wild USA election in November in the markets?
Yes, thanks for having me on, Alex. Well, it's been one-way traffic for financial markets, really, after the US election. Traditionally, you see a relief rally once we get some kind of result, regardless of who wins. But this has certainly been pretty clear a Trump trade where we've seen US equities, the Dow Jones, S&P 500, the NASDAQ all hitting new all-time records after the Trump win. The US dollar in particular had a very big move. I know we've discussed on the podcast before that the US dollar's fate was very closely tied to the probability of a Trump win, and we saw the US dollar really recover from the start of October when the polls started favouring Donald Trump. The US dollar jumped from a 15-month low at the start of October to where we are now at 2-year highs. So it's been almost an 8% rally over the quarter. That's close to the best quarterly performance in a decade. So the US dollar, in addition to shares, really a big beneficiary. But we've seen in other markets as well. So, for example, we've seen US bond markets rally, yields have fallen. And, of course, Bitcoin. Donald Trump became a late convert to Bitcoin during the election campaign. And Bitcoin, which, is really clear signal in terms of risk appetite in markets, moved significantly higher and, of course, broke the $10,000 barrier in December as well. So it's been a case that markets have been particularly strong on the back of Trump's win. We've also seen that filter through to some other market measures. So, for example, if you look at the difference between the amount of investors that are buying call options, which essentially are a view the market moving higher, versus buying put options, which is a view on the market moving lower. That skew is at a record high, in a sign that option investors at least are remarkably positive on the outlook, and certainly the highest level we've seen in nearly 30 years. And going into the real world economy, business optimism has jumped as well. In fact, the NFIB Small Business Economic Survey saw its biggest jump on record post-election. So the US dollar, shares, Bitcoin, and business optimism all sharply higher after the Trump win. Of course, not everyone can be a winner. The biggest losers, certainly in FX markets, the euro, the Canadian dollar, the Australian dollar, and the Chinese yuan.
Interesting stuff. Quite an explosive end of the year, obviously. So what about, obviously with Trump's win, there's a return to that focus on tariffs and the impact that tariffs are going to have should they come to pass in the way that Trump has previewed. We've seen some early talk about new tariffs on Canada, Mexico, and China. What's been the impact just from those talks and that language on the FX markets?
Well, the initial move was a big move lower in the Mexican peso. The Canadian dollar fell to a 4.5-year low versus the US dollar. The Chinese yuan was also weaker, although it's getting supported from the Chinese central bank, so it can only fall so far. So much like we saw during the US-China trade war in 2018 and 2019, those currencies that are most exposed to trade have been the hardest hit, and we've seen a the sort of ripple effect in FX markets with the Australian dollar at 1-year lows and the New Zealand dollar at 2-year lows. So really following the FX market playbook in terms of what Donald Trump's conversation and threats on tariffs have, how they've impacted on FX markets. What's interesting is that the tariffs that Trump spoke about were a little bit different than what we saw in the previous round of trade wars, as I mentioned, in 18, 19. And that was because these were focused on policy goals that weren't really related to trade. So the tariffs that Trump threatened were really about human trafficking, drug trafficking, about making sure that countries on the US border, Mexico and Canada, really were doing all they could to try and control any human or drug trafficking across the borders. And a similar story in China as well. So it was a little bit different to what we were used to, because historically a lot of the tariffs, not exclusively, were about getting trade policy outcomes, not broader policy outcomes. So this just signifies that perhaps Donald Trump is planning to use tariffs in a much wider way when he takes office. And again, that makes it a little bit harder for businesses to plan, because any kind of geopolitical tensions can suddenly introduce new tariffs. Another way that perhaps the impact of tariffs were a bit unexpected this time around was that one of the hardest hit currencies were the euro. And the euro fell from close to 110 down to around 103.5 post Donald Trump's election. Now, part of that was because of the political turmoil in France, but also because the German economy in particular is closely tied to China, and worries about tariffs and trade meant that the German economy, which is already in quite a vulnerable space, is more likely to need support and might mean further rate cuts from the Eurozone. So it's interesting to see how these tariff concerns play out into monetary policy and then play out in impact in currencies.
Okay, let's move on to macroeconomics. The market started the year thinking we get 4 25 basis point rate cuts, but then there's been worries about high inflation after all. So how did that turn out, that projection?
It's been really a case that financial markets have waxed and waned all year about the speed of rate cuts from the Federal Reserve, less so in other central bank regions. The Federal Reserve story was fascinating because, as you say, we started the year thinking that we were going to get around 100 basis points worth of rate cuts, about 425 basis point cuts. But inflation remained sticky, remained persistent in the first part of this year. So markets suddenly thought that maybe we wouldn't get rate cuts from the Federal Reserve, or perhaps only one or two. And then as the data evolved, inflation started to cool. Markets moved back into thinking that we might get rate cuts again, but thought that maybe we didn't have the window, the opportunity for the Fed to cut rates. And as it turned out, the Fed really picked up the speed as we got into September, cut rates with a 50 basis point cut, then cut rates again 25 basis points just after the election, and then look likely to cut by 25 basis points again in December, just as we record this. So After a lot of toing and froing from the financial markets and worries about what the Fed would do, it seems like the start of the year's prediction turned out exactly right, and the Fed Reserve does look like they'll end up cutting rates by that 100 basis points. Other central banks were a lot more consistent, although in general you have to say that they probably picked up the pace as well. Really, the first central bank that we saw was the Swiss National Bank at the start of the year, and they've really continued to cut very, very quickly over the course of 2024. A couple of other nations were interesting as well. So Canada and New Zealand both saw a significant slowdown in their economies and both cut rates really quickly and ended the year with 50 basis point rate cuts as well. So right throughout the world, it's been a case that the speed of interest rate cuts has accelerated. In the Fed's case, it was the case they accelerated from shifting perceptions or expectations in the middle of the year. But the fact that a lot of central banks around the world were all much quicker to cut than the Federal Reserve explains to some extent why the US dollar has just been so strong and just dominated FX markets, as I say, up at 2-year highs as we record this.
So these worries about whether we'd get rate cuts obviously didn't really worry the markets that much. We've ended the year at new all-time highs. What's the outlook for 2025 in your view, Steve?
Yeah, well, as I mentioned earlier, that a lot of the metrics that you look at to measure financial markets, whether it be financial market confidence or business confidence or smaller business confidence, remain at significant highs at the moment. So we're going into the year, at least from the financial markets perspective, in a very positive frame of mind. If we think about what's potentially going to help markets into 2025, really those key themes are, first of all, that unemployment has stayed really low. And if we look across the globe, the sort of global developed economy unemployment rate is around about 4%. That's as good or better than any time that we've seen since the early 1980s. So the unemployment story, which tends to be the most important story for global economies, is in a really good position. Inflation, like we said, after a bit of a scare in the middle of the year, has come down. That's why we're seeing central banks able to act, and those rate cuts should be supportive for the equity market and the global economy in general. So overall, the outlook for 2025 remains optimistic. I know typically economists say cautiously optimistic, and I'd probably be in that camp too. But that positivity we're seeing in confidence around the world, particularly around businesses. Consumers are taking a little bit longer to see an improvement in confidence because consumers have really been hit by those high inflation levels we saw in 2021 and 2022. It takes a while to recover from that. But low unemployment, falling inflation, and rate cuts means that the outlook for markets and for the economy should be pretty positive going into 2025.
What about geopolitics? Of course, that's on everybody's mind who studies the markets. What's on the radar for the geopolitical scene in 2025, just to close things out?
Well, I mean, again, that's another part of the global economy that's going to be driven by change from Donald Trump's presidency when he takes over at the end of February. In particular, his policies around the Middle East and around Ukraine. So in particular around Ukraine, Trump has said that he's very keen to see a ceasefire, an end to the hostilities in Ukraine. There's a similar view in the Middle East. So they're two issues in the short term, which could see some kind of resolution. It seems like we're nearing towards a resolution in the Middle East. Ukraine maybe not yet, but they're going to be absolutely critical in terms of whether we do see a resolution or whether we do see an escalation. Trump's got a history of really wanting to get deals done. So that's a possibility. And of course, what we saw out of the Russian invasion of Ukraine in 2022, what we saw from those tensions in the Middle East in 2023 was big jumps at both times in commodity prices, particularly energy prices. And certainly the impact of the Russian invasion of Ukraine in 2022 was a big reason why we saw that extension of inflation pressures in 2022. So those two stories will be critical. Away from the views of actual conflict, Europe's got some tensions to face. We had a no confidence motion in the French Parliament over the last month. Germany's facing elections as well in the first quarter of 2025. Like we mentioned earlier, the European economy is underperforming. Tariffs do impact the European economy. So, geopolitical issues in France and in Germany can really weigh on European economic growth and potentially a weigh on the euro as well. So when it comes to geopolitics, there's a lot on the agenda, and there's particularly a lot on the agenda that can play out in the first quarter of next year.
Absolutely. Well, it's a big bang to the end of the year, Steve. Thanks for breaking it all down from a global perspective, as always. Great to have you, and we'll circle back in the new year for some new thoughts and forward-looking ideas about what's to transpire. Thanks so much, Steve.
Thanks for having me on. Thank you.